Well, hey guys, welcome back to the channel. Thank you so much for joining me for another video. I'm Allan. We talk about stocks on this channel, and I made a video the other day about Fuse, or F-U-S-E stock. Now, Fuse is a SPAC ran by the guy who created the SPY, right, or the ETF that follows the S&P 500. Big ETF pioneer. So I was really excited about Fuse in general, okay? I made a video about Fuse about a month and a half ago, 2 months ago, something like that, talking about them potentially bringing BlockFi public. Now, when that rumor came out, the stock ran up quite a bit. Now, the stock right now on the actual definitive agreement that they will be bringing MoneyLion public. MoneyLion is similar to the likes of SoFi or Upstart or different companies like that. The stock is down at $11.58 after jumping up to almost $13. You can kind of see the price action here on the chart, okay? Got it pulled up here in trading view for you. Now, the stock ran up to $12.90 the other day before falling all the way down to 11. I think it was like 11.11, 11.13, something like that. Now, I bought a bunch right in here for my 10x challenge over my Patreon. If you're interested to see how I'm doing over there, there's a link down in the description for that. But it's jumped up quite a bit since then. Now, by the end of this video, I'm going to tell you whether this is going to be a long-term hold for me or a quick swing trade. Okay, so stick around to the end of the video, probably the 56-minute mark or something. I'm kidding, I'm not going to talk about this for an hour, but I am going to do a deep dive into this investor presentation of MoneyLion, and I'm going to tell you again whether this is going to be a long-term hold for me or it's going to be a quick in and out swing trade, okay? Because I think you guys owe, I owe you that much, okay? If you aren't familiar with what MoneyLion does, you will be intimately familiar with this company by the time the investor presentation gets through. Now, listen, if you do some of this due diligence on your own, if you're easily swayed, if you are sold too easily, these investor presentations look amazing, right? They're meant to be sales presentations, and they do a really good job of selling the company. Now, you need to be able to read between the lines. You need to be able to do some digging versus some of the other companies that MoneyLion or others might compete with. The reason I like BFT so much, okay, and PaySafe is because for the amount of money they bring in, the partnerships they're inking, the different avenues that they have to make money, and create more revenue with the partners that they're already working with. I'm really excited for PaySafe because I think it's valued really well. Now, with MoneyLion, you have to compare it to companies like SoFi or others. Now, if you're going through these investor decks, please do some research on some of the other companies that this company compares with. Please do some research based on their competitors, and we'll talk about some of those numbers. We'll talk about some of the different multiples and things like that. But MoneyLion, here we roar. This is the first one. First slide here. Disclaimer, I'm going to read all of this for you. I'm kidding, I'm not. This was gone over on a webcast. That's why it says today's presenters up here. But this was presented by the CEO, CFO of MoneyLion, and then the CEO and CFO of Fusion as well, okay? Now, Fusion Acquisition Corp has raised a bunch of money, $350 million at their IPO, and they intended to find a company that was worth around between $750 million to $3 billion. You can see that right here, okay? The chairman, again, Jim Ross, big guy in the financial field, financial product innovator and experienced director, currently a senior advisor to State Street, an ETF pioneer and instrumental in creating and bringing the market many of the world's first ETFs, including the Spider S&P 500, SPY, right? As well as the first gold ETF or GLD. So brilliant guy. I was excited for Fuse to kind of figure out who they're going to partner with, and I am excited that it's MoneyLion, okay? Acquisition criteria. They talk about different criteria here. We'll get into all of that here in a second. Here's the transaction overview. Now, The implied market cap at $10 per share of MoneyLion is $2.4 billion. Now, seems like a bargain for a fintech company, okay? Transaction represents a 9.2 times 2022 estimated adjusted revenue and 16.5x 2021 estimated adjusted revenue. Transaction expected to be funded through a combination of Fuse $350 million cash and trust and $250 million of PIPE financing. Net proceeds from the transaction of $526 million placed on the balance sheet, net of transaction expenses. Current shareholders of MoneyLion to maintain approximately 76% pro forma ownership. Closing expected in the first half of 2021. So we can expect this by June this year, okay, to be all said and done, obviously subject to the current approvals and things like that. Now, public stockholders will receive 12% of the company. That's important to note. Very similar to what we see out there from most SPACs. That's kind of what we get. PIPE investors are getting 9% of the company. SPAC sponsors or Fuse are getting 3% of the company, and current stakeholders are currently keeping 76% ownership of the company. Okay. Now, all right, meet MoneyLion, who we are. We talked about this, okay? America's leading digital financial platform. MoneyLion is empowering hardworking Americans to take control of their financial lives through powerful products that make it easier to borrow, save, invest, and earn all in one app. Provide financial advice and access to every hardworking American through advice, investing, banking, salary advance, and credit building. Some of these I absolutely love. Some of them, like the investing section, you're going to learn they lag behind their competitors, okay? I actually downloaded MoneyLion to kind of figure it out. I signed up. I went through the process for you guys to figure out what I like and dislike, and I'll share some of that insight with you as well. Next section here, led by technologists and financial products experts. They have people that used to work for Square. They have people that used to work for Citadel, Gain Capital, a lot of big financial firms, Goldman Sachs, Barclays, Merrill, right, and Morgan Stanley. They're essentially saying banking is broken, and they have done a good job at getting the revenue they have with relatively low cost of ad spend, and they plan to spend a lot more on marketing, like I talked about in the previous video. And here's who their target market is. Okay, here we go. Serve hardworking Americans. They're focusing on 100 million Americans in need of a financial partner. Underserved population represents trillions of annual savings, spending, and investments. $250 billion revenue opportunity. Let data drive our approach. Understand our users' problems through data. Billions of user data points. Identify financial pain points that drive product development and delivery. Now, we're going to talk about this in a second, but they do collect a lot of data, like a ton of data. And that I think will aid them in the future, obviously. They offer a single platform to address all their needs. Multiple product engagement increases revenue per customer at a lower cost to acquire and serve. They deliver new products and advice to better serve their users. Proprietary technology platform allows for a faster, lower cost product innovation cycle. Once you get into the app, and I'm going to show you guys some of this as well. Once you get into the app, and I'm going to tell you guys about this as well. There's a lot of stuff that they can sell you on and make money. There's a lot of partners in there. So, improve our users' financial well-being, deliver differentiated value to our users while producing strong revenue growth and profitability. Okay, the next section here. Their mission is to provide financial advice and access to every hardworking American by rewiring the banking system. Their metrics. They've established a user base of 1.4 million users with accounts that are already set up. They've accelerated adjusted revenue, 102 million run rate, or 197% year-over-year growth. That's great growth. Proprietary tech platform, 99% automated processing, which is great because when somebody wants to apply for a loan or they want to do something, it's all done on the back end. They don't have to have people that actually make these decisions. It's all proprietary tech. Which is smart. Deep consumer insights, 1.5 billion user data points, efficient monetization, 4-month payback. Payback period of LTM median cohort performance. Efficient monetization, 4-month payback. Proven unit economics, 63% contribution to profit margin. So they talk again about their target market. Now, their current revenue opportunity, 250 plus billion. They're going to have to really disrupt the banking industry to get 250 plus billion dollars. That's like Open Door saying, you know what? We're going to get $1.2 trillion worth of revenue. It's just not going to happen, right? Like, so this is the kind of stuff that you have to pay attention to when you look at these investor decks. You have to pay attention to this kind of thing because it's audacious, right? It's a little crazy for them to expect anything close to $250 billion worth of revenue. I mean, it's madness, right? They'd have to have like 100% market share of these 100 million people, and then sell them on stuff, right? So kind of keep that in mind, okay? Proprietary tech stack drives product innovation. So they approve loans and things within 10 seconds. It's pretty cool. They actually have loans that don't require, that just require you to link your bank account. So they are doing some things that are a little different than their competitors, which I really like. Again, 99% of this is automated. They have 55 machine learning models, instant transfers on our rails. Not sure what the heck that means. Prototype to deliver at around 6 months. Again, these last two things, no idea what they're talking about there. Product layer, they have Instacash. We'll talk about that in a little bit. Investing, we'll talk about that. This is not like SoFi. You cannot invest in individual stocks from what I found in the app. Maybe I'm wrong. Roar Money is their banking service. Credit Builder Plus is similar to like Credit Karma. Pay Over Time is launching in 2021. They have a secured credit card coming out in 2021 as well, and a crypto platform coming in 2021. This could drive a lot of revenue for them. So this could change the game for them. That's another reason I'm excited about MoneyLion. Okay, let's go on to the next one here. Deep insight into financial and non-financial behavior. This is that section I wanted to talk to you guys about with all the data points they collected. They have 13 million plus connected bank accounts. It's massive. 1 billion transaction data points per day. 100 plus integrated data sources. 3 billion inferences, categorizations, predictions per day. 14,000 insights per user. Now listen, having this amount of data, okay, that's outside a credit report, okay? So let's see a traditional bank, okay? They decide to loan to somebody or not based on their risk tolerance and the credit worthiness of that person. Now, do you think they have 1 billion data points on that person? Most banks don't. Most credit unions don't, but they still decide to lend them based on FICO scores and things like that. Now, with a company like SoFi or MoneyLion or some of these other Upstart or something, right? They collect so much data on their users. They can really do a lot of risk management when they loan out this money, and they'll know up to a certain degree, right, in the 90 percentiles, whether someone is going to pay back that loan and how quickly. Okay, so that's pretty cool stuff. Okay, that's the power of data, and that's why they can make these decisions in like 10 seconds. Okay, so keep that in mind when you think of MoneyLion. But also some of these other fintech companies, okay? Not just MoneyLion. SoFi is doing this. Upstart's doing this. Some of the other big dogs are doing it. Square, PayPal, some of those others. They're going to get into some of this stuff as well. So again, who they serve. They talk about who they serve. They're looking to kind of capitalize on that just middle class group. It's the largest. People say middle class, and that ranges from what people making 30K, 50K a year, something like that, to 150, 200K a year. It's all over the board, right? So middle class is pretty much everybody. 100 million Americans, they're saying. Products essential to daily life in time of excess and times of need. Roar Money, digital checking account with cash management and e-commerce features. Investing, fully managed investment account. There we go. So that's where they said it right here. Fully managed investment account. We'll get into that in a second, okay? So when I signed up for it, I was like, oh, I can't buy individual stocks. That's dookie. In times of need, Instacash. 0% APR salary advance offering. This is pretty cool. So they offer money up to $250 in advance of your paycheck, which is pretty sweet. Credit Builder Plus, credit building program with personal loans. So again, credit karma type stuff, okay? Now, so where more money is, very simple, digital bank account, okay? That's pretty much it. They're not going to have branches or anything like that as far as I can tell. And it says they'll have cash and crypto rewards, again, coming in 2021. MasterCard price protection up to $1,000 and get paid 2 days early. That's the Instacash kind of thing, okay? I remember, when I was younger, being in a pinch, and I had one bank account that gave me a direct deposit advance, and I had another bank account that didn't. I ended up going, long term with the bank that was able to do things like a direct deposit advance. And at that point, I was willing to pay some sort of fee for it, okay? And now I'm in a much better place. But there are plenty of people out there that that live paycheck to paycheck. And deal with these sort of issues on a weekly basis, and they get themselves in these bad spots where they're borrowing money and from these payday loan people, and the regulation's getting better, but it's still terrible. And for you for someone to have access to $250, okay, up to $250 with no interest, you're not paying anything, right? It just comes right out of your paycheck, but you're able to get it early. Maybe you can't afford gas or groceries or whatever it is until your paycheck is in there. And this is pretty cool. So I really like this feature. Okay. And that's what this Instacash is. And their NPS score of 80, or their Net Promoter Score of 80. When I used to sell jewelry, we were big on Net Promoter Score. And 80's pretty freaking good. So again, you can get cash in your account within seconds. It's pretty sweet. No credit check, no interest. It's all tied to your bank account and whether you have direct deposit set up. So pretty sweet stuff. All right, Credit Builder Plus. Powerful credit building program. Build credit while you save. Establish your credit history or rebuild your credit with Credit Builder Plus. No hard credit check. Lions Share a loyalty program your way to zero membership cost. So it's a way to track your credit. You can get loans up to $1,000 and obviously monitor your credit health. They're saying that most people are able to see a 60-point increase in the first 60 days of using Credit Builder Plus, and that's a pretty cool statistic. It is a proven statistic that when people pay attention to their credit and know what's on their credit report, they are able to increase their credit scores. It's worked for me. It's worked for my wife. It's worked for a ton of people that I know. And it's something that they don't teach enough in schools, right? So I like that there are companies trying to do the right thing here. But it's not without cause, right? I mean, they're making money from these programs as well because they partner with debt consolidation firms and things like that, similar to what Credit Karma does, okay? All right, investing. So this is my biggest issue right now with Moneyline. They partner with Global X and Wilshire, and it's a managed account, okay? When I signed up for it, I was able to pick my investment risk or my investment strategy, essentially, okay? But that was it. That was as far as I could go. They asked me a few questions. Now, I tend to be a riskier kind of person. Now, the risk profile had me at, I'm okay with my account going 25% up or down, okay? I'm fine with bigger swings, honestly, right? Like, I don't know. I tend to be a pretty risky type investor in more of my long-term portfolio, but it's done well for me. In this case, your risk profile is 85% stocks, 2% cash, and 13% bonds is the highest. That's the most aggressive you can be in this platform. And the things that you're investing in, 85% stocks, 13% bonds, 2% cash. That's aggressive, right? It says an aggressive allocation takes on substantial risk in an attempt to maximize returns and is heavily weighted to equity ETFs, with a small, typically 20% or less, weighting in fixed income ETFs, and may endure extensive volatility in pursuit of higher long-term gains. So you're going in large cap stocks VOO, small to mid cap stocks VXF, international developed market stocks VEA, international emerging market stocks VWO. So these are Vanguard, a lot of Vanguard ETFs. Short-term municipal bonds, SUB, and U.S. municipal bonds, VTEB, and then obviously a little bit of cash as well. So that's aggressive. Doesn't seem too darn aggressive. I mean, maybe it is, but it doesn't. For my taste, it's not aggressive enough. I like to be able to have the freedom of investing in individual stocks, and you can do that with SoFi. I believe you can't trade options in SoFi or do things like that, but you can trade individual stocks with SoFi. So that's one thing with SoFi. They have Moneyline beat by a mile. So keep that in mind. This is my biggest pet peeve with Moneyline so far. Okay. Next section here, advice empowering a better financial life. Understanding our users' financial lives enables us to provide tailored guidance and products through our automated advice platform to achieve their goals. So they have this is that thing called Heartbeat, okay? Precision guided advice, where our advice will guide our users. So again, the branding is really good, okay? The branding's really, really good. Introducing Money Life, content that drives low-cost user acquisition and engagement. Engage users through Money Life, video influencers, community. So they do have like a social network type thing, type vibe. So I think once they start spending a lot more on advertising, I think they're going to do some big things. I really, really do. I think it's going to grow pretty quick and pretty non-organically, because they're probably going to spend a lot of money on influencers and celebrities and things like that. And it's going to be cool to use Moneyline. So pay attention to that kind of thing over the next couple of years, because I'm going to show you here. They've spent about $11 million this over the last year on marketing, and they plan to spend a lot more. Significant upside from scaling proven products and strategy. So they like we talked about, they're planning on launching a crypto exchange, launching a secured credit card. Things like that will help drive some more user growth, but also revenue as well. New products launching, so pay over time. This is payment flexibility, so users can finance raw money purchases over single or multiple installments, similar to like what Affirm does. Affirm is massive. Again, the secured credit card, $250 to $10,000. What a secured credit card is you put your own money, right, on a credit card, and it's like you're slowly spending money from your credit card. And then the idea with secured cards is eventually they turn into real credit cards at some point. That's probably what Moneyline will do as well. Crypto platform, trade, round up and earn rewards in digital assets, and use a crypto wallet for peer-to-peer payments. This will be huge for them, okay? Once they can disseminate this information to people will be much more excited about investing in Moneyline, okay? Their financial roadmap. We're gonna skip over some of this because we went over a lot of this raw money and stuff, okay? Yeah, here's the ad spend thing. Only $11 million in 2020 in marketing expense. They plan to invest $195 million over the next couple years in ad spend. That is a big increase, and that should help Moneyline get on the map, right? Because a lot of people, right, and I'm hearing it in the comments, like, I don't know what Moneyline is. What the heck is Moneyline? So that's important to note, okay? Now, in 2020, they're going to have adjusted revenue of about $102 million. That's a big difference from like SoFi having adjusted revenue of like 600 million or something like that, right? So big difference. So kind of keep that in mind with this. Upstart had about $140 million worth of revenue this year, or will, maybe 160, something like that. It has about a $7 billion market cap. This will have a $2.4 billion market cap. So I like it when you compare it to a company like Upstart. And again, I think once they start spending a lot of money on ads, they're going to grow like crazy. Okay. Here's where they talk about the their valuation relative to peers. 9x 2021 revenue, 17x 2022 revenue. So you got to look at that. Okay. Affirm. We talked about Affirm. Afterpay, Square. So they're essentially saying, look, our multiples are better. And honestly, everybody claims that. From what I'm seeing for SoFi and their presentation, I don't know if they took old numbers from SoFi, but it is not 13 and 20. I don't know. I have to look at this again, but SoFi's multiples are better than Moneyline from what I found. But the market cap is going to be almost 9 billion. It's like 8.7 billion for SoFi or IPOE. Big difference. But SoFi's a better platform, period. Yeah, Moneyline is going to be a short-term swing trade for me. Okay, I'm gonna swing it up to I'm shooting for 15-20% gain, something like that. I think it could easily get over 12, 13, 14, $15. No problem, right? I don't think it's going to go crazy like IPOE. I just don't. So I want to be totally upfront. I know this is a long video. It's a deep dive. I hope you guys stuck around till the end so I could give you my my final idea of what I think of Moneyline. I do like businesses like SoFi better. I like BFT better from a, comparable to Square and PayPal and things like that. I like PaySafe a lot. So I think the multiples there are fantastic, and I don't think it's too late. So that's all I have for you guys on Fuse and Moneyline. Again, the stock ticker is FUSE. I think we're gonna see a lot of upside from here once this marketing gets disseminated. I think we're gonna easily get to $12, $13, $14. I really do. But I think it's gonna be a slow go, just like it was with BFT. So just kind of expect that. That's my 2 cents. I don't know if that's what's gonna happen, but I'm guessing that that's what's gonna happen. Again, thank you guys so much for joining me for another video. I appreciate you. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.